How's it going, everyone? Welcome back to Matt's Crypto. Hope you're having a fantastic Memorial Day weekend. I wanted to check in and do a quick update on the crypto market after our last video yesterday, talking about where we thought Bitcoin would go down over the weekend, coming into the weekend at $34,000 and potentially going all the way and revisiting our $30,000 low. However, as you guys can see, as you guys are probably been keeping up with, that did not happen. Unfortunately, for me, because I want to get some more buy orders in, it didn't get to the low points I was hoping it might. However, this is a good thing. Let's be honest here. It only dropped down about to, I want to say, we can go over to our chart here real quick. I believe it came down to right around $33,000, just above $33,000, tested that area, and then came back up and has been sitting around $34,000 all day today, which is great because that means we haven't retested our lows and maybe we are out of the low. Maybe the bottom is in after all. But the market overall today didn't do a whole lot. You can see it's up 0.6% over the last day. I know it's crazy to say that the cryptocurrency market actually chilled out on a scary Sunday. Nuts, right? The good news is we're just chilling right now. And if we go back to our chart real quick, this is from someone on Twitter. I did not put this together, so this is not my TA, but I did think it was a pretty good job. You can see we have this triangle forming right here. It is also in a channel downward right now. Like I said for the last couple videos, I expect us to float around from 30K to 40K. I know that's a huge range considering where we're at, but I do believe 30K to 40K over the next several weeks is very realistic. Maybe we go out of this triangle and break to the upside, or maybe we come retest this $30,000 low. Maybe we even set in some new lows. Maybe the bottom's not in yet. We're going to look at some other charts today to see where we're at, what we're thinking with Bitcoin, what we're thinking with the overall market. But the news right now is that we're kind of floating around. We're kind of bouncing around this channel. At least we're not feeling like we're going to keep tanking. That's the good news. I think that's the overall positive sentiment right now is that maybe the bottom is in, maybe the lows have been met, and even though we are not anywhere near our all-time highs, we're still about 50% off of the all-time highs. At the very least, we're cooling down a little bit. We're taking it easy. And so far, so good with Scary Sunday not getting crushed on Bitcoin and therefore taking the rest of the market down. As you can see with our alts, Cardano had a great last 7 days. Now it's been up 5% today, so it's doing pretty well. XRP had a pretty good day. A lot of other things are kind of just chilling. Within, under 5% in the crypto market, especially for some of these altcoins, is really nothing. Polygon still up around 180. I didn't get those buy limits in that we talked about yesterday on yesterday's video. I was looking to get Chainlink low 20s. That didn't happen. Polygon to get low dollar, didn't get it. None of these things came down as far as I was expecting them to or hoping that they would, and I have my buy orders in for. So the good news is that we didn't lose any more money, and our value of our portfolio is still up a bit, but we didn't get those buy orders in either. I'm gonna keep them where they're at because I do believe there's still a chance we have maybe even like a double bottom here where we have this first one here, and then we have another long, slower one here where we kind of breach that $30,000 mark, maybe even $28,000 Bitcoin again, at which point I do believe all these altcoins will drop significantly from where they are right now, and that could provide some really good buying opportunities. My top three I'm looking at right now in altcoins are not even that much of an altcoin. They're pretty big. They're top 10s. Ethereum, Cardano, and Polygon, which I believe is just out of top 10. Yeah, number 14 right now. I'm also going to pick up Link, like I said, but the top three right now are definitely Matic, ADA, and Ethereum, mainly because all three of those, like I said yesterday's video, I can earn interest on or I can stake right now and not have to worry about the consolidation or potential small bear market or whatever it is we're going to have to encounter over the next couple weeks and months. I'll be earning money on my money regardless. Let's go and check out a couple things here. I wanted to pull this up for you guys because I haven't talked about this yet, but I checked it out the other day, and it's very interesting to see the spread of who owns the Bitcoin that are in circulation, right? Who owns between 0 and 0.001 Bitcoin? That's a lot of different addresses. It's over half of all people that own Bitcoin own less than 0.001. If we pull out our handy dandy, that is not our calculator. That is a random address that owns a lot of Bitcoin. If we pull out our calculator right here, if we pull out the calculator, we have 0.001 times roughly $35,000 right now. That's $35 worth of Bitcoin. I probably could have done that math in my head, to be honest with you, but the point is it's very, very little amount of money that people have in Bitcoin. That is, look, you can see right here, that's over 19 million addresses of the, I'm not even sure how many are total. I don't even know if it has it on here. There's a lot of addresses. Probably 24 million people own Bitcoin if I had to guess based on this. But 19 million, right? Actually, this is stupid. It's just double whatever this is. I'm struggling to do math today. Clearly, it's been a long day. If you can't tell, I'm a little sunburned. I was out all day. I got the nice Hawaiian t-shirt going. We were out on the boat today. Anyway, $35 is the amount that the half of all people that have Bitcoin in their address own. Only $35 worth of Bitcoin at the current moment. You step up to the next one, and we have, it's what, 9 million people. Yeah, just over 9 million, or just about 9.5 million people, which is about a fourth of all people that own Bitcoin, own between $35 and $350 worth of Bitcoin right now. Then you keep going. We got about 5 million that own up to 0.1, which would be $3,500. So we're talking about thousands of dollars of Bitcoin now. And then once you get into the 0.1 to 1, we're at 2 million. And then after you go over 1 Bitcoin, which is $35,000 worth, this is a pretty serious investment for any average human being. And even people that have a good amount of money, a $35,000 investment is a serious investment. Between 1 and 10 Bitcoins, you have under a million people that actually have that. Only 1.7% of all addresses have over 1 Bitcoin. After you get over 10, it obviously drops off a bunch because $350,000 worth of Bitcoin right now is some serious change. You have to be really involved in crypto or have a pretty substantial net worth to have that much money in Bitcoin alone. You can see right there, we're at 130,000 people in the entire world. Way less than 1% of overall people that hold Bitcoin have more than 10 Bitcoin, which is over $250,000 worth of Bitcoin at this moment. At some point, it might be worth millions of dollars of Bitcoin. But then you look at the top 100 richest Bitcoin addresses. People that own Dogecoin, one of the major arguments against Dogecoin is that there are like 2 or 3 wallets that own 30 or 40% of all Dogecoin. That cannot be said for Bitcoin. The top wallet address, at least according to this BitInfo charts, and I'm not sure if this has every bit of data that exists. I imagine that it does. But if it doesn't, the one that they have at the number 1 spot is almost 300,000 Bitcoin worth $10 billion. Yeah, you heard me right. It's, I believe, $10 billion worth of Bitcoin. 1.57% of all coins in existence are owned by one person. So it's just about 1.5% of every single coin in existence is owned by one wallet address. And you can see this person's gone in and out quite a few times. 599 buy-ins and 407 sells or trades out. And you can see the last time they traded was in 2000. This is the first, 2018 was the first time they bought in. So this is a massive whale. Last out was 2021. This is possible that it's an exchange. Oh, there you go. Binance Cold Wallet. It's very likely that this is Binance's wallet. I don't know, and I haven't done the research on it yet, so I don't know for sure. But it's unlikely that it's one single person that owns this many. It's very likely that it's an exchange or it's some company that owns the exchanges that owns that much Bitcoin just for liquidity purposes and just because they've been in the scene so long. You have to have a absolute ton of money to own that much Bitcoin. It's worth $10 billion today. Can you imagine what it was worth when it was 60,000? Oh, $20 billion. Thank you very much. Anyway, the point is here, this is a cool site. I'll leave it down in the description below if you want to check it out. This just gives you some more information about the fact that there are only a certain number of people that are ever going to be able to own Bitcoin because there's only 21 million that exist. 21 million sounds like a lot, but in the grand scheme of things, if every millionaire in the world owned 1 Bitcoin, there wouldn't be enough for each millionaire to have 1 Bitcoin. There's way more millionaires. I can even look it up. I'm not even sure what the number is. How many millionaires in the world? 51 million, almost 52 million millionaires in the world. That means not even half of them can each own 1 Bitcoin if they wanted to. That just goes to show you the supply really isn't as much as you might think. It's really not that much. And when you break it down to who has what, it's not super heavily skewed towards the people that have a lot of them. But the point is more and more people buy in here, right? We only have 20 million addresses right now. 40 million people total own it. You know how many people in the U.S.? 360 million? If each person in the U.S. owned any amount of Bitcoin, you're already looking at 9 times the amount of people that own Bitcoin right now in the entire world, right? So the point I'm making here is that the supply of Bitcoin isn't as much as you might think it is. And as time goes on and it gets harder and harder to mine Bitcoin and more people buy into it and understand it and it goes mainstream, the supply shock is really going to take an effect. And the only thing I'm trying to say here is that even though we are in a downtrend, even if we're going to consolidate, even if we're in a little bit of a bear market, people freaking out, you got to look at the longer picture here. At some point, and this is just the graph version of these numbers right here. It's just laid on a graph. You can see who on a bar graph essentially owns the majority of Bitcoin. And as you get to the top end, it's like nothing, right? It's the majority of people own 0.1 to 1 Bitcoin, somewhere in this range right in here. As more and more people get involved in this, the supply shock is really going to take a toll, and that's going to be a huge, huge driving force in the price of Bitcoin over time. And I mean over time in terms of several years, right? This is going to be, for the next 100 years, all of the Bitcoin won't be mined. So it won't be like, boom, now that it's all been mined, 21 million exist in the entire world, right? Currently, we have 18.7 million circulating. Once 21 million are out there, that at that moment, or near that moment, in about 100 years from now, give or take, that's when shit's really going to go nuts, in my opinion. If this is around in 100 years, obviously this is all theoretical. It could, things could change drastically in 100 years, right? 100 years is a long time. But even in 10 years from now, as things get closer and closer and closer and harder and harder and harder to get Bitcoin, the price, in theory, should go up purely because of the supply shock, purely because of the lack of supply, especially if the demand goes up, if mainstream marketing and mainstream media and just finance in general, DeFi becomes a thing like it really is right now. Let's keep moving on, though. I don't want to harp on that too long. $1.5 trillion market cap, which is about the same as it was yesterday. So not much has changed. Like I said, the market's moved little here, little there. Market cap's still about the same. Let's keep moving on here. I wanted to show you guys this as another factor to look at when we're talking about are we in a bear market? Has the cycle peak hit? Are we going to have a double top? What's going on here? And no one really knows, but we can keep on looking at what we've seen history-wise and what we know right now based on all these metrics we have that are available to us on the internet, which is it's glorious. It's a great thing. It provides ability to contemplate and to speculate on all of these things that we love so much and see where we might be going right and where we might be going wrong. This right here, we're not going to even get into the details of the chart. The simple thing you need to know here, and this is laid out by Alan on Twitter, Alan AU. I've told you guys to follow this guy. If you haven't followed him yet, you're missing out. Definitely want to follow him. He basically breaks it up into 4 steps, right? You have this first cycle, or the first run up here. The consolidation phase is number 2 with very, very low volume spent output. You can see here, this is based on how long they've had it. So very low anyway, very low spent volume. Then 3 is the peak, and it's quick. I mean, the first one was a quick run up, and then 4 is the bear market where it comes down 50 to 85%, right? 2017 run, same thing. Tons and tons of action going on here in the first phase while it's accumulating. Then we got a bit of a blow up here. You can see there's a lot more volume going on here as soon as it comes off on this dip. This is halfway through, roughly halfway through the bull run here on the second cycle. So the time that this starts to get a little, we start to see some more volume going here, some output going here between the two. I mean, it's really all of these, but it's very hard to see. I mean, 2 to 3 years really where we got the most of the purple here. You can see that there's more action going on here as the dip happens. 3 is the blow off top. 4 is the bear cycle. Again, you can see these huge dips with these massive amounts of outflow. Then we got this cycle. 1 was a bit of a longer run up than the last 2. You can see based on time wise, it's a bit of a longer run up. Then we're currently somewhere in phase 2 if we're comparing to previous cycles. And the point I want to make here, and I'm actually in the way here. Let me move this out of the way for you guys. It's double me. We're going to kill this one. You can see right here, this is where we're starting to see again. We had this bit of a come down, right? Like similar, where is the last one here? We have a low volume here. This one we have really low volume, but that's because there's a lot less ability for people to be holding that long because it's a brand new thing, right? So we got to look at this 2017 one. As the stuff starts to come up here, that's when you have that big sell-off, right? The big dip here, 40% dip right here. A lot of volume going on, and then we start to come back into phase 3 here where we have the blow-off top, the parabolic move over here. Same thing's happening right now, right? And it was a little bit more hot to begin with in the phase 2 here, but that's also because we did have quite a big dip right here coming into this big push up to the 64,000 mark, which was a little bit different here than we have in this one. But the point here is that we're starting to see those outflows again on that big drop off. People sold out, people freaked out a little bit. Will we repeat history where we get back on track here, and in phase 3 we go blow off top towards the end of the year like we did in 2017? This is the same kind of thing, but a different way to look at what we've been talking about already, right? Another way to look at this, and we've been looking at the halving tracker mostly, so we'll go on that one first. Blue here, we're still on pace for 2017. Again, I'm getting less and less excited about this idea and this prospect of it playing out the same way as 2017, but we are still technically on track with 2017. It's kind of hard to see the blue here, but we are basically right above this little consolidation phase around 400-day mark, or just before the 400-day mark on the 2017 run. And if we continue to track, right, you can see we're right here. If we basically just picked up on the green instead of we go from blue to green here, that's what this marker is here. That's what this 2016 repeating starting today. If we followed exactly the 2017 run from where we are right now in this cycle, we're still hitting $255,000 by end of year, which I think a lot of people are like, whoa, that's way too much hopium, way too unrealistic at this point. Let's slow our gears a little bit. I also agree that's probably extreme, and there's no way in hell we're going to follow the 2017 run exactly. But just keep in mind that that's where we're at if we just continued on from where the 2017 mark went, where we're at currently. Now let's go look at that a different way. This is based on the price scaled of 2000. This is basically the same kind of scaling from the previous cycles, right, on this run, price-wise, except this has got a multiplier. So, like, if we're starting, right, we're starting from our all-time high from previous cycle, which was 19.5. So if we start right down there, and that's 1 of 1, right? That's a 1x multiplier. And we get up here, that's 2x where we at from the previous cycle. So that would be about $40,000. Come back down, right? Get almost up to, you know, right, $60,000, which is about a 3x from right here. 20,000 times 3 is right around 60,000. So that's where we're at, right about 3 here. So you can see when we get up to 4, that's 4x what the previous all-time high was. That's how this chart works. So it's similar in a lot of ways, but this one I like a little bit better to show you and illustrate that we really still are. We're maybe now a little bit behind previous cycles based on just a return on investment, but we are still on track. We are still more or less on track with both previous cycles and the geometric mean of the 2 cycles, which is the blue in the middle. Obviously, these charts are much closer together than our halving tracker one because it's not based on specific prices. It's based on return on investment, and that makes them seem a little bit closer. But the point I'm trying to make here is there's a bunch of different ways to look at the same thing. Technically speaking, we can still be on track. We can still have this mid-cycle drop off, shake out, and then come back up in the V formation. Or we could be accumulating and consolidating for the next couple months. Don't know. We will see. This is one more chart I wanted to show you guys that really kind of lays out how we will know if we are repeating 2017 in some way, shape, or form with this shakeout, middle of cycle coming back up, or if we are on a different path entirely. We're kind of in no man's land and things are a little bit different this time, which I personally believe will be the case, but we'll see. When you look at it this way, and this is, keep in mind, this is a little different than these last 2 charts. These are lined up based on previous all-time high points. This one's based on the halving. Okay, this one's days after halving. This one's based on all-time previous highs, days from the first break of all-time previous highs. Okay, that lines up pretty well. This one lines up pretty well. This third one here is lined up based on the halving. Based on the mid-cycle dip, shakeout right here. So the reason that these all line up so well, where we're at, this is the white is where we're at right now. The light blue, I believe, is the 2013 run, which gets all the way up to here. And I'll probably put myself back down to the bottom here so you guys can see it's a little bit better. That the top bar is the 2013 run, and the darker blue, which is kind of hard to tell, is the bottom edge here. That is a 2017 run. The white is where we're at right now. The reason that these line up so well is because they are specifically lined up to match when they had their dip together. So this is not based on days. This is not based on return on investment. This is not based on price. It's solely based on lining up this shakeout dip that we believe is the mid-cycle shakeout, or some people believe that's mid-cycle shakeout, so that these line up to show us, okay, if they do line up at this point in time, where are we going to end up at the end of the year? If things go according to history, if things repeat themselves, if the cycle is continuing to work the same way it has in the past. If we do rebound sometime mid-June roughly, we got to be getting back up to those numbers of $50,000, $60,000 on the top end, or right around $45,000 on June 15th on the bottom end. So if we can get back to around between 67, so between all-time high and 45K, if we're right around $50,000 or so, we're on track. Things potentially could be like they have been in history. You come down to like August time frame, again, we could still be even floating around the all-time highs. We could still be around $64,000, maybe $70,000. That's all reasonable, and we would still be on track based on previous cycles. And then we'd have that, one more dip before we really have that blow off top. That would occur, according to this right here, somewhere around October 19th. This cycle peak around $315,000 scaled to this year would be more like end of October, maybe right around my birthday, October 26th. So we got to see how this thing works out. We got to see where we're at. If you're really hoping for the cycle to continue, and this is where I'm at, I'm really hoping that this case plays out the best, because it would mean that we would hit a $100,000, $200,000 Bitcoin by end of year, which would be absolutely amazing. We would need to see ourselves above $45,000 Bitcoin by June 15th, 20th, somewhere around that mark, somewhere around middle to late June. We need to be back up above $45,000, which is $10,000 above where we're at right now. Personally, I think that's totally possible. You guys have seen how much Bitcoin moves. It's totally within reason. Will it actually happen? Don't know. I am leaning more towards the side of I think we're going to float around below that mark for a while. I think between 30 and 40K for several weeks is going to be the case. But this is why we all play the game, to see how it goes. That's all I got for you guys today. I hope you enjoyed the video. If you did, please give it a big thumbs up. Helps me out with the YouTube algorithm and helps us get new subscribers on this channel. We have over 100 subscribers in just under 2 weeks of making this channel, which is incredible. Let's see if we can get some more subscribers by leaving likes in this video. Let's see if we can get to 3 likes in this video. I know that's asking for a lot, but see if you guys can do it. Smack that like button down below if you enjoyed the video, and make sure you subscribe if you haven't already. You're gonna want to be part of this whole journey. We post videos every single day, helping you keep up to date with Bitcoin, altcoins, Ethereum, everything that's going on in the market, and helping you learn about how all this stuff works. So if you enjoy that kind of content, make sure you subscribe, tell your friends about it, and leave a comment letting me know what you guys did today if you had a good day. We'll see you guys all tomorrow. Take care.